Hey everyone, Troy Eckard here at Allen, Texas, Chairman of the Board of Eckard Enterprises. Today's topic is pretty simple. Is China effectively putting themselves in the position of being one of the major swing players when it comes to crude oil demand? And if so, how come? Why all of a sudden is China such a key player when it comes to international crude oil supply and demand? Well, let's take a look at it from a fundamental. It's probably the second largest consumer of crude oil on the planet, second to the United States. It has unlimited capital because it's all run by the government. They have an enormous population, 5 times that of the United States. They know they're going to have decades and decades of future use and consumption capacity for crude oil, no matter how many electric cars they make. But at the end of the day, what they want to do is they want to control their own destiny when it comes to buying and selling and owning crude oil. Now you say selling, well, how are they going to sell it? Well, there is selling going on inside the country because it's state-owned storage facilities. They can control the market when it comes to energy cost. When it comes to the supply side, they have very limited production. I believe their production is currently 4 million barrels a day. That's a drop in the bucket. China basically imports about 11.3 to 11.5 million barrels a day into their country. It comes from places like Brazil, Iraq, Iran. It comes from Saudi Arabia. It comes from Russia. China, over the last 10 to 15 years, has built an enormous storage facility. So the two government-owned oil companies have about 700 to 800 million barrels of storage for their own companies because they produce inside the country of China. When it comes to additional storage, which is like their strategic petroleum reserves, it's about 1.2 to 1.4 billion barrels of storage. No one has an exact number today, but it's enormous. It's about current capacity twice as large as the United States' SPR. When it comes to terms of actual oil in place, well, they've been importing about 500,000 barrels a day every day in excess of their actual consumable amount. They've been buying excess oil every day for years, putting it into storage. Today, the estimate is somewhere between 1.2 and 1.5 billion barrels of crude oil are sitting somewhere in China in storage as a backup, whether it's soft barrels from the port where it's imported into the country, it's in a holding tank, it's at local geographical locations. It's enormous amounts of oil. It's about 1.2 to 1.5, 1.6 billion barrels of oil, best I could find from data. Why is this all critically important today? Well, Saudi Arabia and OPEC have been the swing player when it comes to supply. If they want the price of oil to go up, they cut back on supply, oil prices go up. If they want oil prices to go down to stop America's shale revolution, or they want to slow down another producer that's threatening their market share, then they flood the market with oil temporarily 6 months a year, an extra 1, 2, 3 million barrels a day. Oil prices drop $10, $15, $25 a barrel. Saudi and OPEC have been the swing supply side player for the last 30 to 40 years. But China doesn't like that. China wants to control its own economy, wants to control its own energy. So at the end of the day, what they're looking to do is they're looking to add additional supply into their storage, increase their supply over time. They've added massive storage facilities. And what they effectively have done is they said, what we're going to do is we're going to control the market by not buying when we don't want to buy. We'll simply take out of our storage and we'll use each day what we normally buy. Today, the report I saw last week was they're buying 6 million barrels a day less oil than they normally buy. Well, if they normally take in 11.5 million barrels a day and they're only buying 5.5 million barrels a day, and they're using 6 million barrels they're taking out of storage, that's 6 million barrels a day of excess supply after the Strait somewhat has opened up that now is in the market, plus all the additional oil UAE, Saudi, and everybody else is dumping as quick as they can because the Strait's opened up. You have this huge temporary surplus of supply. Why would China do that? Well, if I'm China and I'm sitting with 1.2 to 2.2 billion barrels of storage between SPR, Strategic Petroleum Reserves, tank storage facilities, and the actual oil company storage facilities, I control 2 billion barrels of oil. Well, the question then becomes, well, if I want the price to go down, maybe I don't buy any oil. Maybe I don't buy any oil at all of the 11.5 million barrels. And I just simply take the next 300 million barrels for the next month and I take it straight out of my reserves. I still have another 6 months to 9 months worth of supply in my storage to run my country. That'll drop oil $20, $30 a barrel. Now, what would I do if I were China and I oversupplied the market because I stop buying it. The lack of demand creates excess supply in a moment's notice. What's going to drive that price of oil back down? I mean, $10, $20, $30 a barrel. Well, then what do you think they're going to do? Well, they're going to go buy. They're going to lock into long-term contracts. They're going to go find the countries and the supply source that's weak, that needs the money, that has to sell. Why do they need the money? Why do they have to sell? Because the wells are producing 24 hours a day, and they got to move it from the wellhead to the pipelines, to the storage, to the ports, to the end customer. If you stop the flow of oil as a result of poor economics, wells have to get shut in. So those producers will sell it virtually at any price because they got to get the oil sold, transferred to somebody else so they can refill the tanks, the pipelines, the ports, and the facilities, and the cargo, waterborne vessels. China is going to become, if they already not, considered a swing demand player. That swing demand player can equally control the price of crude oil, whether it goes up or down, by simply asking for less demand, providing less demand, stopping demand altogether, or in some larger quantity of demand stoppage, or at least eliminating demand temporarily while the price of oil goes down. Then what they do is go back on a buying spree. Say, okay, we used 300 million barrels of our own reserves over the next 60 to 90 days. That's an excess of supply of 300 million barrels of oil. Traders are going to know that. And they're going to say, look, we got extra oil. We got to sell it for a lower price because there's nobody buying it. How many other countries have the capital, the bandwidth, or the storage facility to buy that excess supply? They won't do it, so oil prices will keep going down. China then comes out and says, I'll tell you what, I'll help you poor little guys out. I'll go ahead and buy the next 300 million barrels of oil, not at $70 a barrel like it is today, but I'll buy it at $52 a barrel. So they're taking 1.2 to 2.2 billion barrels of storage. They sell it at a price they want to. They don't sell it, but they use it or consume it at a price that's really low because when they bought it low. They stop buying in the open market, which drives the price further down. Then they buy on long contracts, short contracts, volume contracts. They buy the oil they need to refill their storage, and they keep playing the game. And they just add more and more storage. Something the United States ought to think about. Something every oil-consuming country, and specifically those that are oil-consuming and also oil-producing like the United States, should factor in. Maybe the United States should build a 1 to 3 billion barrel storage facility, continue to produce like we are, and the next time Saudi and OPEC try to overflow the market, flood it with oil, we simply don't buy from them. We use out of our own storage facilities that we put in there at $60, $70 a barrel, but it allows our producers to keep producing from the wellhead, and they just keep pumping into storage, and we sit there for 6 months to a year saying, we're going to produce at the same rate, the same speed, and maybe now we have to pay 25 cents a barrel for storage. Big deal. That's a lot better than selling your production at $40 a barrel when it's worth $65 to $80 a barrel. Maybe China is the smart one. Maybe China is the country that is saying to the world, if you can't control supply, you can control demand. It's a great thought. I think it's happening. I think China has become and will become the number one swing player on the demand side, just like Saudi and OPEC has been the number one supplier for the last 35 years. Thanks for listening.